financing part. So ADUs are auxiliary dwelling units, very popular. I've received a lot of calls for folks that want to add these to their property, either to move in a family member or to for additional income to rent them out, right? So, oh, Carlos is not here, but Robert is Carlos. That's me and Susanna. And I'm going to have Robert come up first so he can go over the units itself. Then we'll talk about financing. If you have any questions, jot them down and feel free, to interrupt us. So I'm going to hand this over. Where's Robert? He's got set up our.
And do we have the remote? How do you change that? Change the slides? Up or down? Thank you. Thank you for coming. I'm the Development Service Director with the City of Upland. So basically anything that's land use related on private property, we have regulations and our department handles that, whether it's building safety or planning, which are approval of projects. Anything land use related, we take care of, and that includes, of course, the ADUs. As mentioned, ADUs are very popular. This year, we'll probably, by the end of the year, have permitted over 50 ADUs. And every year it keeps increasing because of the popularity. And so tonight, I'm going to talk about two things. One is common use for ADUs, and then also what are the benefits, and then a higher level review of the laws and regulations. There's a lot of laws and regulations regarding ADUs, so I just want to cover kind of the basics. If you have any questions, I'm here to happy to answer any of those. So first, let's start with what is an ADU? So that's the secondary dwelling unit, which with complete independent living facility, so kitchen, bathroom, that type of thing, and for one or more persons on a lot that's zoned either single family, multifamily, and even mixed use. The city has one mixed use zone, commercial, residential. All the rest do not allow for residential uses. It's not intended to be sold separately from the primary unit, but also obviously it can be rented. ADU generally takes three forms: detached, attached, and converted, and I'll cover those three in a visual. Under state law, it's considered an accessory structure, so we can't look at it as an independent unit. It's just an accessory structure, and that's in terms of your single family zone. Normally, you can only have one home. You can have an ADU, and it's not considered another unit; just considered an accessory structure. Then ADUs, those are within the confines of the existing footprint of the home. And those can be anywhere from 220 square feet to 500 square feet. So there are three types of ADUs. So to your left, under converted ADUs, you have, that's a JDU. It's within the confines of the existing home or within a proposed home. And then to the right there, that would be a converted ADU. So a detached garage, detached accessory structure that doesn't have living area, you can convert that. And then you have new ADUs that can be either attached to the home or it could be detached in the rear yard. So what are the benefits of an ADU? One is extra income. So owning an ADU can help you gain long-term wealth by offsetting your mortgage costs or generating income once your mortgage is paid off, or even help with monthly expenses. Also allows for aging in place. ADUs allow people to age in place by providing options such as downsizing into the smaller ADU. Other options are to use the ADU for living quarters for maybe a caregiver or for a relative or friend who needs a place to live. And in connection with that, it allows downsizing for elderly or empty nesters that live on a large piece of property, that have a large home. They know they want a lower maintenance situation. They can actually move into the ADU and then rent out the primary house. It adds to their retirement income, but they still get to live in the area where they live. They don't have to move somewhere else. And then, of course, multi-generational living. It can provide a place for a family member to live together on the same property, such as the elderly parent or a grandparent or a child or a grandchild. So let's have a little high level view of laws and regulations. So can I build an ADU? In most cases, you can. ADUs are allowed in single family and multifamily properties. All residential zones that we have in the city, there's no minimum lot size. How many ADUs can you have? A single family lot can have one JADU within the confines of the home or attached or detached ADU. Multifamily property can have up to 2 detached ADUs, and there's some other allowances as well. Can I put an ADU in my garage? Where in the past garage conversions were illegal, now ADUs, you can convert your garage legally. So if it's say a detached garage, you can convert that to an ADU. That would be considered a detached ADU, or you can attach a new ADU to a garage that's detached. Or if in most instances homes have the garage attached to the house, you can convert your garage, and that would be a JADU. Garage conversions may require significant changes in the building code. They were developed not as livable areas, so there may be a cost involved in meeting some of the building code requirements. How big can my ADU be? That depends on the ADU type and your property. So an attached ADU, which is attached to the primary structure, that can be a studio 1 bedroom, could be up to 850 square feet. 2 bedroom or more can be a max of 1,000. Either way, it cannot exceed 50% of the primary home. So if you have a 2,000 square foot home, can't exceed 1,000 square feet. A detached ADU, same limitations. Studio 1 bedroom is 850, and 2 or more bedrooms is the maximum 1,000 square feet. Converted ADU, converting an existing space that's limited to the envelope of the existing structure. And a JDU is, again, within the confines of an existing home, and that's the max of 500 square feet. How tall can it be? Attached ADU can be 25 feet tall if it's attached to the primary structure. If it's detached on a single family lot, it can only be 16 feet. It can be 18 feet if you're within a quarter mile of a major transit stop or high quality transit corridor. If it's a multifamily property, it can be 18 feet. And if you're within a quarter mile, it could be 18 feet if it's a single family lot. And you can also go 2 foot higher to accommodate a roof pitch. Yes. No, maximum 1,000. It's only if it's attached. There's that ratio with the attached ADU in the house, but if it's detached, it just goes by either 850 for studio or 1 bedroom, or 2 or more bedrooms, and max of 1,000. And if it's a JDU, again, it's limited within the confines of the existing home. So how close can it be to my property? So in state law, which all of our ordinances have to comply with state law, we have what's called the state standard. We have to allow at least an 800 square foot ADU. We can't require any more than 4 feet from side or rear property line, and it must comply with the front setback. If there are any development standards like lot coverage or things like that that prevent 800 square feet, then we have to allow that to be reduced. There's other important rules. There's design requirements. State law doesn't really address architectural design requirements, so our local ADU ordinance can address those. So we have some of those, and I'll go over some of those. There are landscaping requirements in some instances to buffer the ADU from adjacent property. Rental terms. So the ADU must be rented for at least 31 days. Our ordinance doesn't allow short-term rentals. So the state law is kind of silent on that. It could be either or. And some cities do allow ADUs to be short-term rentals, but we don't. This is for housing. It's not to create motel spaces or bedrooms. So our ordinance requires that it be rented for at least 31 days or more, and it can't be a short-term rental. If you live in an area that has an HOA, that has to be approved by them. We don't regulate CCNRs. They would generally look at design issues, but they cannot deny an ADU. There are some deed restrictions that are required to be recorded on the property. And the owner occupancy requirement, right now, we can't require the owner to be living on the property, whether it's in the primary unit or whether it's in the ADU. Current law allows us to start requiring that as of January 1st, 2025. A new law in place has gotten rid of that. Now I'll go over that just in a second. Do I need parking? So for a JADU within the confines of the home, there's no parking required. For an ADU, one parking space is required. There are some exemptions. One, if the ADU requires a permit. So there's 4 exemptions in the ordinance. Anything that's not exempt then requires an ADU permit and a 1 parking space. If it's an historic property or in the historic district, you don't need parking. If it's near transit, like within a quarter mile, no parking is required. And there's some other exemptions. Replacement parking. So if you're going to demolish a garage and put an ADU in its place, then no parking is required in that instance, or you don't have to replace that parking that you're losing. So I mentioned that there's some architectural design standards the state law doesn't bring up, and so our ordinance addresses those. And these are some of the kind of key ones. So in terms of a rich roof pitch, the ADU must have a similar roof pitch than the primary structure, and it must have an overhang of at least 12 inches. Our ordinance prohibits balconies on attached ADUs to reduce privacy impacts on adjacent properties. This would apply to, say, an attached ADU that's 2 stories, or an attached ADU on the 2nd story of the primary unit, which would be a JADU. They cannot have balconies. Also, we don't allow roof decks on attached or detached, and that's again to minimize any privacy impacts on adjacent properties. 2 laws that take effect in 2024. AB 976 removes the owner occupancy requirement that I mentioned earlier. Current law allows us to start requiring that in January 1st, 2015, but this law taking effect next year eliminates that sunrise, and we can no longer require any occupancy requirements. AB 1332 requires local jurisdictions to have pre-approved construction plans. So we'll have pre-approved construction plans. If someone wants to use one of those plans to build their ADU, they can submit that, and we have to issue a building permit within 30 days. You're not required to use those. You can have your own architect design your own ADU. And if that's the case, then it's a 60-day review that we're mandated. One thing I want to point out, I have 5 hard copies, and we're one of the only cities in this area. We developed an ADU workbook, and that gives you a lot of the things that you should consider if you want to build an ADU. And it's from the very start to the very end. It even has a chapter on how to be a landlord. It's a comprehensive book. We have hard copies. We have some at the office. I only brought 5, but it's also on our website electronically. So if you go to uplandadu.org, it'll take you to that webpage, and you can have there's an electronic copy. But we also have a lot of copies in our office. They're free. We don't charge anything. One of the nice things that this website has is a calculator. So based on the costs of construction within this region, you can go to the cost calculator, put in some key information, and it'll give you an idea of how much that ADU might cost you. So with that, that's the end of my presentation. Are we waiting for questions after both? Okay. Does anyone have any questions? Okay. Yeah. So some of the deed restrictions, let's see, would include that you can't sell the ADU separately. It's on the same property. That's the requirement. You have to stick to the approved size. You can't expand upon that. It also is, it's a covenant. It runs with the land, and that binds future owners. So if the property sells and that owner that buys the property, then they've got to comply with the restrictions. And then if they do want to get rid of the ADU, then what's required is to get rid of the kitchen. It really becomes a guest house at that point. And so we have to verify that. If they no longer they want to get rid of the covenants and don't want an ADU, then they can get rid of it by just removing the kitchen, and we verify that. Yeah. No, there's no restriction. We can't require that. Well, current law says in January 1st, 2025, we can require a owner occupant requirement. But one of the laws that take effect in 2024 got rid of that. So we will not be able to require owner occupant. Yes. Yeah. So if it's a JADU, which is within the confines of the existing home, no parking is required. If it's an ADU, then one parking space is required. There are some exemptions to that, doesn't require parking, but for the most part, it requires one parking. It doesn't have to be covered. It could be in the driveway. Just one space, or it could be tandem. Yes, right. Off street, yes. Yeah. No, it's on off street, meaning on the property. Right. Yes. Well, our ordinance requires that, you maintain the front setback, and that varies depending on the residential zoning. It can be 25 feet. On Euclid, it's like 40 feet. It just depends on the zone. However, again, we go back to the state standard. If someone wants to build an 800 square foot ADU and they can't build that, say, in the rear yard, and maybe we have to allow it maybe in the side yard and protrude into the front setback, we have to allow that. Yes. Mhm. No, that's the state. That's the state statute that was chaptered in the state law. And it got rid of that January 1st sunrise where we could require owner occupant. That is with this, one of the bills that is effective 2024, that's been erased. And we can't require owner occupant. Yeah. Yeah. 4 feet. Yeah. And that's a state standard. We have to allow 800 square foot ADU, and we can't require setback greater than 4 feet. And we have to allow at least 16 feet. So that's one of the reasons why we prohibited balconies and rooftop balconies, because they can be so close to the property line. If you don't have an alley behind you, your neighbor is adjacent to your property line, that's an impact. And so that's why we prohibited those. Well, there's existing law, it's SB9, and we have an SB9 ordinance, but someone um, can take their lot in a single family zone, they can split it in half, and they could put, I think, up to 800 square foot, 2 units on that new lot. And then the lot that has existing home, they can put another unit. So basically 4 units on the same lot. Now, we have some requirements that require a certain frontage. Some cities might allow you to split the back half of your lot. It's not adjacent to the street. Maybe have a access easement. Our ordinance requires at least 30 foot of frontage on the street to be able to do that. And so far, we haven't had anyone that's taken advantage of that. So the state, over time takes away local control. And when it comes to housing, the last 5 or 6 years, they've approved a lot of legislation that takes away our local control and to accommodate housing. In some instances, I think it's bad planning. Other instances, like ADUs, I think it's good. But that SB9 is, I think, what you're talking about. I think that's in the legislation right now. It's not approved yet. It's going through the committees. Any other questions? All right, well, thank you.
Yeah. And you go down?
Push down.
All right, well, thank you so much for coming. I'm going to talk a little bit about reverse mortgages, and the reason we're talking about ADUs and reverse mortgages is of course about financing at the end of the day. I actually grew up in real estate, so when this came about, well, when reverses came about, and I heard about was about 15, 16 years ago. And I actually always thought that reverses and ADUs always really went together. Because to me, you know, the struggle of making ends meet at retirement is huge. And to think about being able to use a reverse mortgage to pay for that conversion and be able to have your house generate extra income without having a mortgage payment, to me just seemed like a perfect fit. And so we were talking about it, and that's why I'm here to talk about reverses and ADUs a little bit. So what is a reverse mortgage? Well, first off, you can be 55 or as young as 55. In my world, that's pretty young, and qualify for a reverse mortgage. You've got to be a homeowner. And it allows you to access the equity in your home. So for me, I know with ADUs, you are allowed to either be an owner occupied or not, but with reverse mortgages, it is on the home that you live in. So if you were thinking about using a reverse mortgage to pay for, let's say, a garage conversion or to add that ADU, you definitely be planning on living in that home. You've got to be 55 and older, have to have significant equity in the home. By significant, meaning at least 60% equity. Reverse mortgages don't lend 80, 90% of value. And the reason is because the bank basically waits to have any kind of payment. Yeah, so there is no mortgage payment required. You just pay your taxes, your insurance, and maintain that home, but there's no mortgage payment. So what they've got to count on basically is that home. You can also use a reverse for purchase, which we won't go over, but I do love to mention it only because it's been around for at least 12, 15 years now. But every time I talk to realtors about it, they're like, oh my gosh, it's a new feature. You could definitely use a reverse mortgage to purchase a home as well. I mentioned occupancy. You've got to be owner occupied. And reverses are also one of the easiest loans to qualify for, because if you think about it, you don't have to qualify for a mortgage payment because it's not required. I also like to say that reverse mortgages are one of the last, what I call common sense underwriting type of loans. It used to be, I've been doing loans so long that I've been doing loans longer than FICO scores have been around. So, you know, now you live and die by your FICO score. But before that, what you would do is you'd run somebody's credit. And if they had some credit issues or something like that, you would actually just do a letter of explanation and document it. And the reason that reverse mortgages are still that way and they're not FICO score driven is because if you think about retirees, a lot of times you'll have maybe a husband and wife. You usually have one person that was in charge of bills. That's usually the person that ends up being the sickest and passing away the soonest. Well, so if you think about the spouse that never paid bills, that maybe is a caretaker, by the time they figure out that bills are late, it's a long time coming and it's already affected their credit. So for me, that's kind of a standard thing. I see like newly widowed persons that are looking into a reverse mortgage. Their credit was great up until the time that their spouse was sick. And then there was some late payments, you know, maybe their credit scores, you know, taking a hit. But I can show that they've had great credit up until the time of this illness. All that stuff does not disqualify you for a reverse mortgage. So I always like to mention it too. It's a lot easier to qualify than most people think. I do love to talk about the myths. You know, if you've ever heard of reverse mortgages, most people think, oh, I can't do a reverse mortgage because of the bank takes my home, or I lose control over the home, or the bank owns my home if I do a reverse mortgage, or my mom did a reverse mortgage, so there goes the inheritance. Absolutely not true. The bank does not own the home. That's a myth. The reality is that you retain title and ownership of the home. So even if you do a reverse mortgage on that house and then you decide to sell it, you sell it. You want to refinance it, you refinance it. You want to leave it to your kids, you leave it to your kids. What your kids are going to inherit is that home with a reverse mortgage. So they're not losing their inheritance. Any equity that's left in that home. And if you do an ADU, you've now improved that home. You've increased that value. I mean, I don't know about you, but if you've ever been looking at properties now that already have an existing ADU, usually you have a bidding war even in a market where they might not have a bidding war. And the reason is because common sense is going to tell you you're going to have a house that's generating income that's allowing you to cover that mortgage payment, and that's valuable, right? So you're adding value to that home. The other myth is that reverse mortgages aren't safe. A big part of reverse mortgages are insured by HUD. I say a big part because the most common reverse mortgage is an FHA insured reverse mortgage. So HUD tells us everything about how we lend on reverse mortgages. The other myth is that my heirs are responsible if I owe more than the house is worth. That's not the case. The reality is that reverses are what we call a non-recourse loan. So that means that you could be 60, 62, do a reverse mortgage, and it could be 40 years, 35 maybe, before you ever make a mortgage payment. There could be a time where the market is down, that the home value has gone down, and the balance of the reverse is high. Your heirs basically inherit that home, but they're not obligated to pay back more than the home is worth. That's where that non-recourse clause is. So there's a protection on reverse mortgages. And some of the other features that allows homeowners to tap into the equity. That's why people look into reverse mortgages. There's no monthly mortgage payment. Like I mentioned, you have your obligation is to pay your taxes, your insurance, and maintain the house. The unused line of credit grows regardless of home value. That's a really big deal on reverse mortgages. So what that means, reverses allow for a line of credit. You set up that line of credit, and let's say you use it to build an ADU, and let's say you still have some money left on that line of credit. It actually grows over time, even if home values drop, even if your credit score drops. As long as you still live in that home, that line of credit is still available to you. And that's a very unusual thing on lines of credit. It doesn't matter what home values do. I've been doing reverses for sure. 2008, 2009, 2006 home values were up here. And then 2010 and 12 when they were down here. If you had gotten a reverse mortgage with me in 2006 and set up a line of credit, you were still accessing the funds based on 2006 values, even in 2010 and 12, when your neighbors were struggling to sell their home and the house was worth half as much as it used to be. You were still able to access that line of credit. And that's a feature that you can't find on any other type of line of credit except for reverses. And if you think about it, some people say, oh, well, it's based on interest. It's based on home value. It's not tied to any of that. It's just a growth rate that is tied into the current rate of your existing mortgage. So the way I like to explain it is that, we have so many people aging into retirement. There are not enough services. There's not enough, all the support services that are going to be needed. We call it, in my industry, they call it the silver tsunami that's going to be hitting because there's just not enough support for seniors. And there's a lot of people that are going to need this. So FHA has developed a way where that line of credit grows over time. So if you have a homeowner, you're ahead of the game because you can have access to that equity. You can set up a line of credit with a reverse mortgage and allow it to grow over time so that you can use it when you need it. Anything about getting older is more and more expensive. The older you get, medications are more expensive. Being able to stay in place and all the modifications you need to do on your house gets more expensive. As you live in the house, sometimes there's bigger ticket items that need to be repaired. That's what that line of credit is available to do. So it's guaranteed or it's insured by FHA. That's the most popular reverse that I do is the FHA insured line of credit. And that allows you to access those funds. That's where that insurance policy comes from, is FHA saying that no matter if home values drop, you can still access that line of credit. So that's a big deal. And then as long as the terms of the loan are met, the line of credit cannot be frozen, reduced, or canceled. So terms being you live in the home, you pay your taxes, your insurance, homeowners association, you maintain that home. That's your commitment. And they consider you living in the home when it's your permanent residence. And so when you permanently move out, that's when that loan becomes due. So when I talk about repayment on a reverse mortgage, if you move out of the house, you got to sell it or refinance it. It can be repaid through the sale of the property, or you can use other assets. I've had clients that do a reverse mortgage and then they get a life insurance policy and they say, well, I'm going to do this reverse. My kids will be the beneficiaries of my life insurance policy. If they want to pay it off, they can pay off that reverse, or they just can keep that life insurance policy, whatever they want. But when a person passes, or when the borrowers pass and the last remaining borrower no longer lives in that home, that's when the reverse is due. So when you think about reverses in ADUs, Robert mentioned about aging in place, about us, having someone assisted, a lot of times we have multi-families or multi-generational people, it's usually, a daughter or a son that starts visiting more and more just because mom and dad need more help, right? And a lot of times, you're uprooted. And so, instead of working now, you're with the parents trying to help out. What maybe somebody needs, you want to have more privacy. That's where maybe an ADU comes in. Or sometimes I have really active seniors and they just want to do an ADU because they want the additional money. The last loan and how we had talked about, we'd reconnected Virginia and I is because someone was looking for a HELOC and he was retired and he was having a hard time qualifying as well. And the other part of it was that, when you're pulling money out, you're going to have to start making payments. His big why that he wanted to do an ADU is this person he'd been self-employed his whole life. He really didn't pay a whole lot into Social Security. And now they're retired and their Social Security is really, really low. His wife worked for, I think, a nonprofit. She did childcare, also very, very low income. And he said, if something happens to me, we're going to lose my Social Security, which isn't much anyway. And what's she going to do? So their plan was to do a reverse mortgage so that they could cash out to build that ADU so that if something happened to, he thought it'd be him, he probably is, because most times it's usually the person that the person that does the finances, the worrier is the one that passes away first. He was worried that his wife was going to be left with basically nothing and have to sell the home or just lose it because they wouldn't be able to afford being able to live there on one salary or one Social Security. And so their plan was to build that ADU to have passive income for her so she could stay. But I always think about, being able to age in place or maybe trading help, for lower rent, maybe, have a caretaker that maybe is looking for some place to rent that, that's a whole purpose of ADUs and all these new laws that have been passed in the last few years is because housing is so expensive, right? So maybe now you have a caretaker that's, for cheaper rent, they're willing to be at home with mom and dad and be able to help. Everybody still got their privacy, their place to live, but they're able to now have some affordable help, and then be able to age in place. So that's where maybe a reverse mortgage can come in. And so that's where it plays in. I think it's a great complement to what we're doing. I talk about ADUs all the time with my clients. I do a lot of workshops strictly on reverse mortgage, but I always like to bring up the ADU part of it because I think there's just nothing like passive income, or at least being able to, just have maybe someone willing to help out and, in exchange for rent, or just having maybe one of your kids close by and being able to help each other out. All right, and then with that, I'm going to turn it over to Virginia. And if you guys have any questions, we can go at the end. I think is probably the easiest. Oh, as a matter of fact, yeah. If you do. So I have a billboard on Foothill, I think on Central and Foothill is where it is this month. And it offers like a free reverse mortgage kit. So if you have questions, by all means, you can ask them. But if later on you want just information, I'm happy to send you over the reverse mortgage kit. I think a lot of people they have so much hesitancy about reverse mortgage. People always say, oh, I've heard you shouldn't do them. But if you ask like, well, what makes you say that? They don't have a solid reason why. There's a lot of fear behind them. And so my job is really just to educate and maybe plant some seeds about some different possibilities in retirement. Okay. There you go. Sure. People are shy. It's all right. Oh, wait a minute, I do have a question.
Do you have to push the button? No. Okay. So I'm Virginia. I'm with Chafee Federal Credit Union, and we're going to talk about home equity lines of credit. Because everybody refinanced their home in 2022, 2021 at 2%, 3%. Nobody wants to give up that very low first mortgage, right? And if you're not 62 or whatever, and you need some additional cash, home equity lines of credit are a great way to access the equity without refinancing your first mortgage. So say you owe 200, 300,000 on that first mortgage and your rate is in the twos and the threes, you don't want to convert that to a higher rate loan. But you can pull equity. You establish the line of credit up to 80% combined loan to value. So we take the market value, 80%, subtract whatever you owe on your first mortgage, and we give you a line of credit for that difference. That money can be used for anything, home improvement, debt consolidation, an ADU, college tuition. We do them for a wide array of reasons. So the way the loans are set up, they mature in 20 years, means in 20 years, it's got to be paid off. But you can access your line of credit for the first 15 years. The ideal strategy is to use it in the beginning because you have more months to make payments, so the payments stay low. So I was talking about, well, I'm going to go back because, yeah, we didn't talk about closing costs. Of course, there are some closing costs. You just pay them at inception. We don't have an annual fee, right? And then we do have a 6% introductory rate for the first year. You should all have to, make you aware that equity lines of credit are typically a variable rate. They're tied to prime. Ours are tied to prime. Prime's at 8.5. Remember I said you don't want to touch that really low first mortgage, and this is why, because prime's at 8.5. Hopefully the feds will leave it alone and not increase the rates. And hopefully they'll start coming down in 2024. And then at 6% for the first year. So you're fixed for the first year, and then after that, it converts to a variable. Any questions so far? Some success stories, some folks, what our members have done with their home equity lines of credit. One of my members took out the down payment so the daughter could buy a home. 20%, this is in 2021, you're not gonna find, she bought a condo. You're not gonna find a condo for 500,000 probably anymore, but 20% was 100,000. Mom and dad's home was paid in full, so they took over that $862 a month payment. However, if she did not have that 20% down, what's gonna happen? She's gonna pay mortgage insurance, right? So that's just another payment. Number two, my success story, I needed a new roof. So I took out 26,000 and paid 226 on that advance. We're working with a member right now, has 22,000 in revolving debt. There's a timeshare in there and some credit cards. They're paying $834 a month. Combining that on a home equity line of credit, payments are $192. And these payments are not calculated at the 6%. I calculate them at the 8.5. That way, when it rolls around after the year, there's no surprises. So the difference is that you don't have, there's no age requirement for the home equity. The reverse is much attractive because you don't have to make payments. Our loan, you have to make payments. You have to have at least that 20% in equity, so we could establish the line of credit for that amount. Allows you to tap into the equity, whatever you have, you can draw on it as you need it. You can use the funds for any purpose, and you have the 15-year draw. And then we just put a little bit comparison. So both are great programs. Some folks would prefer one, some other folks would prefer the other. And we tie them all into the ADUs because everybody wants to have a little bit of income these days. We have done a couple of ADUs, and the whole purpose was for the income part of it. So do I have any questions? Come on up.
I mentioned you have a long discussion, and why I got interested in the loan now. a long time ago, meeting like the last 4 years, when all the laws changed, they actually started to. Probably specialize in. But I'm getting older and there's a lot of parents, especially kids that are also getting older. And the thing that, a lot of people don't talk about is that parents are teaching. Especially kids is the fact that what's going to happen to them over the years. And the reason I actually started doing what recently was my dream was to teach more parents for special needs kids and adults. Well, first of all, as an adult, just because you start to use those things with me. That's being closer.
Oh,
Yeah. Thank you. So just because they're special needs doesn't mean that they don't want their own privacy. So maybe an ADU could give you that just kind of the lifeline where they're involved enough in the day-to-day, but they have their own special space. And then I thought actually later on, as parents pass away, these kids inherit maybe a home with an ADU and they trade rent for assistance. They could actually be more independent because they could have income. So I'm sorry, I didn't mean to go off topic, but that's the reason that I actually was passionate about ADUs. I grew up in real estate, so I understand passive income and the value of owning property and setting that up. But, the next facet is to be able to have, some help for your kids because I mean, if you're going to count on government assistance to be around and, be above the poverty line for them, it's probably not going to happen. I mean, that's just the truth of it. There's not enough money for seniors. There's definitely not enough money for special needs. There's just so many people that need so much. So it was my thought was just to have them be able to be more independent somehow without having to just rely on, a government to be okay with not cutting their income or their benefits or all the other stuff and leave them as independent as possible. So just something to think about if you've got friends or family that are thinking about that, that's a big one.
thank you. Yeah, any questions? I do have to plug Chafee. Our 60th anniversary is coming up, so Diane Kutlersky is our CEO. She's gonna have some savings promotions, so keep an eye out on the emails. We have some really good rates on certificates. If you're leery about the stock market or your mutual funds, come talk to us. Do we have questions? Mike, closer. Come on, guys, you gotta have a question, at least one. Repeat the question. Okay, so you are here to learn more about ADUs for a family member? Okay. Very nice. Well, leave us your business cards. I do have another contractor drops them off. So we have a contractor, general contractor in the audience that so he's been doing them since 2017. And he's just here to learn more about ADUs. Yeah, nice to have you. The question was, how much equity can you take out on a reverse?
Typically, it's about 40%, but it really has to do with the home value, the interest rate, the age of the person. So it really varies. It's not a straight loan like your traditional loan. There's some factors involved in it, but a good rule of thumb. That's why I said you should have at least 60% equity to think about reverse.
Was that a Zoom question?
Yeah.
Oh, good. Anybody else? Typical cost for an ADU. Robert, come on in.
Well, that varies. It depends on the size. It depends on the furnishings inside the home. There's also development impact fees that are required. The city is charged. Those could be anywhere between 20, 30,000. So it could cost, and maybe you might provide a little bit more detail. It could cost anywhere from $125 a square foot upwards to over $200 a square foot. It really depends on the size. I will give you one secret. If you build an ADU that's less than 750 square feet, you don't have to pay development impact fees. So I'll save you around $20,000 to $30,000. And we had an architect at one of our workshops and putting together the workbook. And he said most of the ADUs he designs are less than 750 square feet. So that'll save you quite a bit of money. Under 750 square feet, that's a pretty good size ADU. You don't have to pay development impact fees. And those can be anywhere from $20,000 to $30,000. No, development impact fees are what cities charge for new development. So by, hooking up to the sewer or the water, you're creating an impact on the network. So those development impact fees are collected to help maintain that network. No, it's been less than 750 for quite a while. Yeah, for quite a while.
Any other question? Any other questions? The question is, does each city have different rules for ADUs? And Robert, you're up.
Well, the state has their ADU requirements and all cities have to adhere to all those requirements. And so the ordinances are pretty similar, except for some things that state law doesn't address, like design or architecture, things like that, which we do. But for the most part, all the ADU ordinances the cities have are pretty similar because the state law requires that you comply with the state requirements.
Thank you.
What about you?
So we have a gentleman that is just for information, mother that is. Oh, she's what? Oh, dad's. Mm. Okay, yep. Yeah, exactly. Yes. So the question is, you take out 100,000 and when do the payments kick in? Okay.
They don't. Now, you're never obligated to make a payment on a reverse mortgage. What happens is that the loan is due plus any accrued interest when you no longer live in the house. So if you sell the house, refinance it, or you pass away and your heirs inherit the house, then they've got to just pay back that reverse mortgage and the accrued interest or whatever. So, and that's why there's no loan term. It could be 30 years, it could be 15 years, because it's based on when you no longer live in the home or you and your spouse no longer live in the home. That's when the loan becomes due. And then that's when the interest, the whole loan balance is collected at that time, but there's no monthly payment. Yeah. How did the taxes work when so it would increase the value? So the property would be reassessed?
Yeah, any kind of improvements you do to your property, whether it's an addition to your home or whether it's an ADU, then the tax assessor would increase the property tax value, so ad valorem taxes, so it's based on the value and improvements of your property.
Thank you. Anything else?
I think saved 20, 30,000, right? 750. And then, so there's the price of you know, just being able to be here is, you get a little tip out of it, right? And then the other part of it though, I think, and you said that the approved plans, that's a big deal too, because otherwise you're paying for, an architect.
Because the state law is effective in 2024. In 2025, we have pre-approved construction plans. So what we'll probably do is have a pre-approved construction plans for different sizes. Maybe one for less than 750, maybe a few for a little bit more. And you can select that, and that would save you quite a bit of money. You wouldn't really need to hire an architect to design it for you. You might need an architect anyway, because there might be some improvements to the outside, maybe architectural design or whatever. But for the most part, that's another cost savings.
Right, great, great. So the question is the time from the time you get the permits?
It varies from one to the other, and if you hire an architect who's designing that versus in 2025 using pre-approved plans, it could be anywhere up to a year or less. Yeah, or less. Depends on the project, but we can take money from it.
That's building, right? So the permit process, of course, just really, yeah.
These conversion plans that you have, would they also include a conversion, like a garage?
We do. That's kind of a unique thing because converting an existing space that varies substantially from one structure to the other. So probably it would be either attached or detached ADU. Pre-approved plans. Converting is that's more challenging because of the variety of existing spaces. It could be a detached garage, it could be attached to garage, or accessory structure at all different sizes. So the pre-approved plans would work best if it were a detached ADU or maybe an attached ADU. We probably have versions regarding those, but probably not a converted ADU.
That's garage. An ADU. Can you build a ADU on top of your garage?
You can if it's attached to the home. It could be, you have a second story. If it's detached, you can't. We only allow a single story detached ADU, which could be 16 feet. Or, 2 additional feet if you're within a quarter mile of a transit area, and 2 additional feet for roof pitch, but only if it's attached. But again, the structure was built for single story, the foundation was built for single story. There might be some significant structural costs that might be involved if you do put something on top. If it's like a attached garage, you want to put a second story built garage, there may be some significant costs because of structural improvements.
Went through a lot of work for the structure and the slab and all that, so it's doable in some cities. I think that's one of the things that varies.
Okay. So the question was, can you build an ADU on top of an existing garage? And it will depend by city. All over the place. Yes.
So now after the loan, you built an ADU, you will keep always paying a variable, or you can fix the rate at some point.
You would have to refinance it into a fixed loan.
Can't get second.
It would
Yes.
have to be refinanced. You can do that, but yeah, it's, the program itself does not automatically convert to a fixed program. You would have to refinance. Yep. No more online questions. Folks. If you think of any questions, the business cards, make sure you grab them and then you can call us anytime.
Thank you, everyone. We appreciate you attending the seminar here tonight. If you have any questions, please feel free to email Virginia at or you can come to a branch or even just reach us online at any point of contact. Again, we thank you for the night and we hope you have a great day. Thank you.